there, Casey Healey, Director here at Sector 21 Novocastrian in Newcastle, back for our monthly update with mortgage broker Nick from Inovayt Finance. Thanks for coming in, Nick.
Thanks for having me again, Casey.
Hey, let's talk. Elephant in the room.
Elephant in the room.
What's going on?
Cash rate increases.
Did 0.5.
Yeah, big jump. So obviously that's, I think it's 0.75 now in the last 3 months that it's increased, which is quite incredible given that it was only 6 months ago we were being told it wouldn't increase until 2024.
Yeah.
And look, the signs are that they're going to continue to increase that cash rate to manage inflation, which is the other elephant in the room. So yeah, it's very, very interesting times. I think it's caused a lot of stir with the help of our wonderful media in Australia.
I was going to say, with the media, it's all over the media.
Yeah, so they obviously love a story. They'll hang on that one for the next week or so. But it is real. You know, a lot of the other thing that we do know is that a lot of people are rolling off really low fixed rates this year that were 2022 year fixed rates. So there's going to be a lot of nervousness, I guess, in the general population about what do these interest rate increases look like for the family budget. How do they impact people's ability to spend and save and meet their commitments? So it's definitely interesting times.
Yeah. I know this is kind of like how long's a piece of string, but how far do we see them increasing? Have you?
It's so tough to have that, I guess, that crystal ball outlook. But at the moment, a lot of the major bank economists are saying that they're seeing it getting to around 2% cash rate.
Which means?
Fours.
Yeah.
Depending on what your margin is that you've got.
From the bank. So So cash rate is what banks lend, is what Reserve Bank.
That's the daily, the daily rate, the interchangeable rate. So it is definitely linked to the variable portions that many people have. So that impacts what the overall interest rate you receive. So, when it was at 0.15 or whatever it was, 0.1, a lot of the interest rates are in the low twos. So just think if you're at 2% cash rate, a lot of the interest rates are going to be in the low fours for those competitive rates. But some people are going to be higher if they haven't reviewed or,
Still time to review, even though interest rates are rising, isn't there? Like
always time.
Always time to review your mortgage. Like
it's
there's
probably
always
more important now because some people. I mean, I spoke to someone the other day that hadn't looked at it for 4 years just because they hadn't, and they're already 1% higher than the current market. So you think about that. If we're here saying that it may get to 2% by Feb next year, the cash rate, and you're on 3.5% now, then that's
what's
in
that
the fives.
actually going to be?
Yeah, that's in the fives, whereas you could be back in the fours. And as we've talked about in the past, the differential in interest rates in the twos has a lot smaller cash impact than the differential once we get up in the fours and the fives. So
because even now you look at it, and I think there was lots of posts around social media, and we actually did post about it too, what it actually meant, this 0.5. And what was it going to hit your back pocket? And look, it ranged from $120 a month right up to $300 and $400, depending on your mortgage.
Yeah, how much debt you have. And that's the thing, so it's not, I mean, when the media says crash and burn, it's not crash and burn.
No.
It's the difference between going out for dinner one time a month or whatever it may be. But in reality, if it continues to increase,
well, then that does really hit that back pocket.
And I think what we've all got to remember is that whilst it is a bit wild that it's increasing so fast, and I've never seen that happen.
It's never been so low, right?
It's never been so low, and there is method behind their madness in that they want to manage inflation. Because the thing that's costing us more money than interest at the moment is our cost of living. That's hitting us, it's hitting us harder than interest rates are ever going to do in the next 6 months, in my opinion. We've got petrol, groceries, electricity supply, water supply, all this stuff is just going through the roof. And that's always going to have a higher impact. So they really are trying to manage that
balancing out
quickly. So that's why they're taking these big actions, is to try and dramatically bring down inflation. Hopefully it works, and hopefully we can return to some normality early next year. But it sounds like, we're in for an interesting next 6 months.
Prediction is it's going to increase for at least another 6, possibly 12.
I think we'll see another large increase in July. Definitely, by the sound of it. And then, who knows? It'll depend on when the next quarterly numbers, I think they're in July or August. come out and the RBA will have a look at those inflation numbers. Ideally, they want to get it down to between 2 and 3%. I think the last one was over 5.
I was going to say, what is it currently over 5?
Yeah, so it's there's a bit of work to do, but they're scared. If you go to the shops on the weekend, you're going to see a lot less people than you saw 3 weeks ago. That's how they bring down inflation. People stop spending. Yep. The demand, starts to pull back and supply starts to catch up, and we'll see some changes.
For people wanting to really do some numbers and do some work on budgeting, is there something out there that they can use? I think government's got a budgeting.
Yeah. So there's plenty of online content and calculators. I mean, I tend to point people towards the Money Smart website, which the government put together. I find their budgets and calculators really good.
I'll put those links in the notes for you to be able to access those. So definitely worth, especially on investment properties and things like that, to really know your numbers, do your budgets and plan for what could be.
Yeah, absolutely. Why not? And I mean, a budget's what's going to help people be comfortable and confident in the next 6 months.
That's it, and that's what we want.
Yeah.
That's what we've got for you today.
Yeah.
We've discussed the elephant in the room in great detail. But if you have any other questions, look, if you haven't reviewed your mortgage, then do so. There's no cost in it, and it's going to ensure that you're getting the best deal and really maximising your return. So. And
the other thing there is that even if you're not in a position right now to review your mortgage, or it's just you've got too much going on, then at least call your bank or call your broker and ask them to drop your rate. It's a competitive landscape out there. It's one phone call, even if you're on hold for 20 minutes, the next 10 minutes speaking to someone may be the difference of $100 a month. So worthwhile.
Definitely. Thanks for that. So if you've got questions, don't hesitate to reach out to myself or Nick. He's happy to have conversations with you to ensure you're getting the best deal and making smart money decisions. That's all for us this week. We'll talk with you next month. See ya.
Cheers.